You know one of the most annoying things about trading? Lag. You see a setup, you're waiting for your indicator to give you the green light, and by the time it does, the moves already happen. So today, I want to show you a couple of tools I use to think about this problem. The first is an indicator from Chart Prime called the Step Channel Momentum Trend. The whole idea behind it is to react to what the price is actually doing right now. But an entry signal by itself isn't enough. We need context. So we're gonna pair it with a second indicator that acts as a simple trend filter, just to help us stay on the right side of the market. I'll show you how I put these together to build a clear framework, and we'll look at it on the gold 15-minute chart. If you get a value of this, a like on this video is always appreciated. Okay, let's hop over to TradingView. So here we are. First thing, just go up to indicators and type in Step Channel Momentum Trend. It's this one by Chart Prime. Let's add it to the chart. So what's going on here? Well, most indicators like your RSI or MACD are based on smoothing. They average out the price, which makes the line look clean, but it causes the lag we were talking about. This one's different. It's built on market structure. The actual swings, highs and lows the price is making. It only reacts when the structure changes. Let me show you what I mean. The main thing to watch is the center line. See how it's not smooth? It moves like a staircase. It stays flat and then it'll snap up or down to the new level. It only does that when the market makes a new confirmed pivot high or low. It's waiting for a real proof before it moves. Then you've got these two outer bands. They just show you volatility. When the markets get choppy and wild, the bands get wider. When things are quiet, they get tighter. Simple as that. And the easiest part is the candle coloring, which is what I use for signals. If the candles turn green, it suggests that buyers are stepping in with some force. If they turn red, it suggests sellers are taking over. And this is the important one. When the candles are orange, it's basically the indicator telling you, hey, nobody is in control right now. That's my cue to just sit back and wait. You'll also see these little diamonds. They're just to mark that exact pivot that made the center line move. Okay, so this just gave us a good read on momentum, but we still need to know the direction of the overall trend. For that, we'll add our second tool. Go back to the indicators and search for Swing Arm ATR Trend. It's also called Black Flag FTS. Let's add that. I just make one small tweak to the settings. I go into the inputs and change both the ATR period and the ATR factor to 9. Now the way I use this is super simple. It's my big picture guide. If the line is green and the price is trading above it, I'm only thinking about potential buy setups from the step channel. I just ignore any red signals. And if it's red and the price is below it, I'm only looking for shorts. All the green signals get ignored. That one rule helps keep me from trying to trade against a strong trend. So how does this look at as a thought process? Let's walk through it. If I'm looking for a potential long trade, the very first thing I check is the FTS filter. It has to be green with the price above it. If it is, then I glance at the step channel and I'm just patiently waiting for some of those orange sideways candles to show up. Once I see that, I'm waiting for the first green candle to close above that orange range. For me, that's a potential entry signal. As for managing the trade, a logical spot for a stop loss could be just below the low of that orange structure. And for short, it's the exact same idea, just flipped. I need to see a red FTS line with the price below it. Then I'm watching for an orange consolidation range. My potential trigger is the first red candle that closes below that range. A stop could just go above that high of that orange structure. And here's another thing I watch for, the step channel center line. Price often get pullbacks to it. So in a trend, if I see the price pulling back to that line, it's just a key area I keep an eye on. Maybe as a place to manage a trade or watch for a potential re-entry if the trend still looks strong. The whole point of combining these is to get a clearer map. You have a tool that helps you see when to be patient and another that helps you see which direction to focus on. It just helps remove some of the guesswork. And of course, this is really important. Please remember, this isn't financial advice. I'm just showing you how these tools can be used to build a strategy. It's an educational example. You should always do your own analysis and figure out what works for your own trading plan. Hope this breakdown was helpful. If it was, a like and subscribe would be awesome. Thanks for watching, and I'll see you in the next one.